Aloha, ladies and gentlemen. It is Friday, August 8th, 2025, 10:58 a.m. Hawaiian Standard Time. This is the first video of the weekly real life trading reports. So, what I have been doing this past week was lightening up a bit on um, being more nimble on positions. So, for example, the way that I have things set up, and this is a simulated trading account because I don't want to put my real trading account on here. But the way that I have things set up is I break them down into these different categories. And um, in my trading account, I have this top one right here is for things that expire this week, and then I'll have like under that I'll have a theta instead of option strategies. It's labeled theta, and that is specifically trades that are usually um, short naked options in some way or form. The end result is that I have no plan of taking ownership of the stock, and then below that I'll have short put long stop, and finally below that I have long stop. And you can move these around. So what I have the reason why I was being a lot more nimble this week is that I'm getting ready to move. I'll be leaving the Aloha State around the end of this month, relocating to the Eastern Standard Time Zone, and I want to keep as much liquid cash on hand as possible during this transition. You know, sometimes things come up that might be unexpected that need to be paid for. So keeping myself is liquid as possible at the moment is one of my priorities. Then once I get settled in, then it's going to be a reevaluation, and I'll probably turn up the dial on some active trading. However, this week I was a little bit lighter. I closed positions a little bit earlier. We did have um, we did have a drop in the market. Um, was it Thursday? Yeah, because of this real volatility on Thursday, I rolled a position. I was on on Service Now because of this big drop. I rolled I rolled some strike price strike price put options around 550. I rolled those to next week at a lower undisclosed strike price. That so far, even though the position was getting compromised, the strike price was 850. So obviously it expired above 850. But yesterday, during this drop yesterday, oh, that's a weekly. Sorry about that. During this drop yesterday, obviously I didn't know that it was going to expire above my strike price today. And even if it was going to, what I the real reason why I decided to roll it is that number one, the 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 debit that it would cost me to roll the option 1 week out and several strike prices down, the debit that would cost me was less than the credit received for the initial trade. So I would still be profitable. I still have a net credit, and I just eliminated needing to manage it the way that I need to manage it in the Hawaiian Standard Time Zone, which is not fun. There, oftentimes I will be waking up at 3:15 a.m. on a Friday, hopping in the shower as fast as possible to get three different computers, I guess two computers on, what one has two monitors, so I'm turning everything on, getting everything organized the way that I want it before the stock market opens, which I had been watching the futures the night before to see what might happen during the trading day today, and then really just have to Hawkeye everything. Hawkeye, not everything, one stock. Hawkeye, one position, one stock, and then roll it or somehow adjust it if needed. So instead of doing all that, since I already knew like what my day is as far as packing and shipping things, what my day was going to be like today, and again, lightening up where I don't even want to. I'm taking less risk this week and heading into next week. Through the month of August, I'm probably going to be very nimble, taking less risk, and that's pretty much that is the basic thing is take less risk. Just this week and next week. So this week, when I'm referring to this week, see if I can move this to take all that off. All right. So this week was here, right? Going into next week, let's say the 10th through the 16th. Same thing. I'm gonna be nimble. I still have I have an open short strangle on ServiceNow. I really enjoy trading ServiceNow, but I don't think it's for the. I think it's not for someone that's unfamiliar with managing naked positions. Like you either have to want to become good at managing naked short options, or you already are, or your account is really really big because the stock price, like it's right around 1,000. I get it right now. It's like, well, it's almost $300 or whatever. Yeah, almost $300 lower, 250 lower than 300 than 1,000. Blah blah blah. But it's closer to 1,000 than it is to 100. So it's like it's around $1,000 stock, and the swings of it, and just the buying power, and there's a variety of things that make it interesting. But I really really love it because it's so expensive, because it's relatively expensive. Like, look at this. This is 7 days to expiration, and there's premium. I know it's not much premium, but the fact is, there's premium at zero delta. Look at this. Oh, I'm on the wrong stock. Let's fix that. If that ever happens to you, make sure you're. For some reason, these things like to unlink. All right, here we are. Premium at the zero delta. That's Palantir. You should take a look at trading that one too. That is one that actually I've been trading, and I will. How am I trading that? I'm trading Palantir in a couple ways. One is shorter dated, shorter days to expiration, and also I'll show you the sleep strategy that I'm doing with certain stocks. But here we got ServiceNow. One reason why I love trading this is look at a 3 delta. You can still get 40 to 80 bucks. Now, one thing I don't like about this is you notice the bid ask spread is really big, and oftentimes when I'll go to like place a trade when the bid ask spread is really big on now, then it just like even if I go at the mid, even if I were to place it at the mid, sometimes what happens is then now the bid ask spread changes, and then now the mid moves to like 55 or 45 or something like that. It's like this constantly chasing down premium. So I don't particularly like that, and that's something that is a nuance of this particular stock that is not like Palantir. Like Palantir's got so much liquidity that it's pretty easy to get filled. And the other thing, Palantir has basically been going up, and ServiceNow has basically been going down. But so I am going to continue to trade ServiceNow, but again, it is I wouldn't be trading this X amount of years ago. I wouldn't be doing this. X amount of years ago, I was only selling cash secured put options on stocks that I wanted to buy at a strike price that I was happy to buy it at. So no matter what happened on expiration date, I was good. Stock expires, option expires worthless, I'm good. Option expires in the money, and I'm assigned the stock, I'm good. I like that idea of I'm good no matter what. So I have been increasing I'm good no matter what uh, positions during this time that I'm relocating from Hawaii to Eastern Standard Time Zone. How have I been doing that? So I've been doing it in one particular strategy, but what's sort of changing is the stocks I'm doing it on. But let's take a look at Palantir, for example. Now, I can't quite remember if I actually did it on this one, but this would be one to consider doing it on. So the first thing we have to do is make sure that there's an option chain, which I already know there is, and we want a good. There's a lot of dates here. See, at least in this paper trade, I'm doing it. We want to like this is a good one because look at there's it goes out to December 2027. That's that's sort of far out. And then open up that option chain. What's the lowest price strike I can sell it at? At this case, it's 13, or excuse me, 35 at a one delta. And what's the bid and the ask for that? It's pretty tight. Look at that. 160 to 165. That's a pretty tight bid ask spread on a one delta out in at the end of 2027. And on here, I'm trying to get filled for 300, so doubling the price. And what I'm running an example on this, or excuse me, running an experiment on this in the paper trade. But in the experiment is like how long can this order sit here when volatility is where is volatility? Let's measure, be clear, and we're going to measure volatility via the VIX. We'll use that for our volatility gauge. Here's the VIX futures. At the moment, volatility is here, right? But what if living in this Trump era, what if these spikes in volatility here, that's all somehow like Trump related? This since Trump became president in the second term, the volatility has just been spiking, which as an option seller can be great. So what if I just kind of hang out here around a $3 limit order and see what happens? See if I can get filled. What does it matter? What does it matter if I wait a month? If I wait a month, woo, whoopsie dee. There's only going to be 800 and whatever 31 days left to expiration. I mean, there's a lot of time left to expiration here, so I can afford to be patient and be monitoring what the bid ask spread is under different volatility conditions and things like that. Now, let's say if I don't want to do that. Let's say if I don't think this is a stock that I have done it on in my live account, but maybe I placed the order, but I know it has not been filled yet. But let's say if this was what a stock that we wanted to do this with. So the next part of the analysis would be let's look at what we can get filled for, which is probably going to be close to between. Do we have a mid set up here? No, or a mark. All right, let's just do it this way. So we can probably get filled for around 162. And does a high of the day was 165. So let's try for 165. Now let's pretend that we get filled at 165 because it did sell today for 165. And What in this case, for this strategy, the plan is that I hold this contract until expiration, and my intention is that if I have to, I'll buy the stock. So if you look at the chart of Palantir, this is a weekly chart. Let's take a look at monthly. So it's a relatively new company, but this is what's been happening to it so far. And we'll get a little more data here. So we got this like standout pivot here at the 120. Looks like the 140. I think probably the 160. And we could break it down into more depth by looking at a daily chart. But overall, it's just been going up, and it's not just that it's been going up. I think that what is happening in the world is governments and Palantir are um, combining for the most basic, non-nuanced, layman way to say it. Combining. So I don't think it's going away. I think it's going to get pushed up. We already see that, around here it was like $100 stock, and in this area still it's like $100 stock, but it's getting ready to be a $200 stock from what I'm seeing. And if it was like, let's say, just a different type of company, if it was something like tires, I wouldn't look at it the same way. But this is a company that, from my understanding, its customers are governments, and it's somehow using data to, let's say, for a lack of a more technical way to say it, predict the future, analyze the real time to have a better chance of predicting the future. So, yeah, I can see it going up higher. So, do I think that there's a high probability in 2 years that Palantir is going to be over 35? I do. In fact, if I could buy Palantir at 35 right now, it would be a good deal. In 2 years from now, do I think somehow the company is going to fall apart so much that 35 would be a bad deal? No, I don't. And I get it; it's a bit of a speculation. I understand that it's a trade. I'm playing the probabilities with attempting to look at some fundamental stuff. So then from there, okay, so I'm good with that, right? So I think this is good. Now, before we move on, let's just make it clear. You could put ExxonMobil in here and look at the same thing. You can put Coca-Cola. You could put whatever company you want. You could take a look at it and build this framework to see if basically you want to take a 2 year, whatever, an $861 loan, right? Understand what I just said. To take a loan, a loan, a loan, right? I'm looking at this particular strategy. I'm taking a loan from the market. Here's the conditions of the loan. And I take a loan now for, let's say, 165. And for, just to make it easy, let me just say 2 years, but I get it, it's over 2 years. I understand it's over 2 years. But for some reason, I just naturally want to say 2 years. So just bear with me. So I take a loan for 2 years. At the end of this loan term, Palantir is either going to be above 35 or below 35. If it's below 35, I got to pay the money back. Not only do I have to pay the money back, I have to pay $3,500. Now, what's great is I'm not just betting, it's not a gamble. Yes, I'm paying 3,500, but in exchange for that 3,500, I'm getting 100 shares of Palantir. So it's not just like I have to pay the money back. Because technically, I kept that money. I keep this 165. I can spend that 165, and I can pay the money back with different money. But at the end of whatever happens, only two scenarios. Either Palantir is above 35 at the end of the term, and I keep the premium, I keep the money that was loaned to me, or Palantir is below 35 and I still keep the money that was loaned to me, and I buy 100 shares at 35. So that's the way that I'm looking at this, and I'm willing to do that. I don't think I'll have to do that, but the reality is when you compare an option trade of, let's say, 28 days to expiration or 7 days to expiration, with 7 days to expiration, if things are moving against you or if something changes in your life, you don't have a lot of time to manage things. You have 7 days. With this one, you have more time to manage things because you got 30 days. With this one, you got 861 days to manage things. That's a lot of time. It's a lot of time to take a loan to see if you're going to have to pay the loan back at the end, which is so beautiful. So then, all right, so now that you understand that part, now let's pull this up again. So we got to like the theory of what's going on of this trade, which is only step one. It's just step one. So now we're going to take this. Let's pull up a calculator. Where can I find a calculator? So we're going to take the net amount, 164.35, divided by the buying power required, 347.50, and just analyze the ROI on this trade alone. Not bad. Not bad. A 47% ROI in a 2 year time period. It's not that bad. It's not great. It's better than what a lot of people are getting, and it is pretty good. It's a couple steps over, not bad. It's pretty good. But I'll show you how it can get great. So now, let's say we do this. Now, okay, we're good with the numbers. We're good with holding it till expiration because we realize, like, just on our buying power alone, which I get it, buying power is going to move, in the way with Palantir, it's probably going to move down. But nonetheless, what are we going to do with this money? Because it's a loan, right? It's a loan. So usually when you take a loan, you do something with the money. So now we need to do something with the money. So now that we like to trade, let's look at position sizing. So the strike price we're selling at is $35. $35, we know, times 100, 3,500. But what if we had $10,000, a little bit over 10,000 to work with? Or what if it's not that we had it right now, but we felt very confident that by December 2027, we would be able to have that. And then, okay, so once that is there, our commitment part to repay the loan, we're good. We got the money to do it. We like the terms of it. So if we sell three, we're taking in this number times three. Let's do that. 64.35 times three. So now we're dealing with, let's call it 500 bucks. Because what I've been doing is I've been rounding up. At this point, I'm going to round up, and now I got 500 bucks. In the amount that I need to make up with the difference, I just get it out of this cash sweep. And then let's look at, so just going to cancel that so we know how we got to that part. But let's now look at something like this. BTCI. So if you're not familiar with Neo's funds, maybe you should be. How about that for a return? You're just buying that, which this is lower. The distribution rate, I get it. It's good. You're looking at a good return monthly, getting paid monthly. Now it's still lower than what I originally showed you, right? That 47% ROI. I get it, but you have to have a little more sophistication to understand how to sell cash secured put options on leads. I get it, no problem. These people are doing the work for you, though. This is the kind of stuff they're doing. If they're generating around 47%, they can afford to give you 27%. Hint, hint. Think about the future, what I might be able to do for you. But so so now let's really have some fun here and look at if I just took in $500 on a loan, what and so far we'll dive in a little more to the BTCI. BTCI, it's relatively new in conception, ETF, income ETF that basically trades on the price action of Bitcoin. These are the monthly distributions per share. So let's just say somewhere between, where was the lowest? About 125, highest being almost 160. Let's just say 140 to make math easy. But first, we got to look at what's the price. We're just going to go with the market price right now. What is the market price of it right now? 63 bucks. Okay, so let's say what's the low? 62. Let's just say 63 divided by 63. 7 shares, almost 8 shares. Maybe I could dip in a little bit and put a little more cash in and just round it up to an even 8. 504 bucks. I get 8 shares. Now I'm getting on average about $11.20 a month. That's only 8 shares. A lot of people kind of scoff at this, mainly because they're not really understanding how to compound things, and they're not really understanding how you can add this with other things. They're just really not understanding the whole trading in the markets in general is why they would scoff at it. But I get it. It's easy. But now let's say if you live in the Philippines. Let's say if you want to retire in the Philippines. So when you start thinking about even just in dollars, it's good because you can keep growing. You can keep growing this. And basically, before we go off on thinking about other currencies, which I do, that's why I'm bringing it up. This is the weekly. What is the? This is the weekly real life trading report. So I'm reporting on what's going on in real life here, and so the next part before we talk about the other currencies, maybe we'll leave that for a different video. But here's the real beauty. When we go back to BTCI, I bought 8 shares, and I know it was $504. Now let's say that the $4, the whatever, to make it from 497 to whatever, 405 or 504, whatever it is. Let's just say instead of just randomly pulling cash out of my cash sweeper vehicle, let's say if I specifically got that from short dated trades, 7-day trade, I got $8 right here. 7-day trade. This one was also filled 35 plus 8 plus 10. So now you see, I have the money from other trades. So here's the really really interesting question: is when I bought this 400 $504 of BTCI, who's how much of my own money did I use? How much of my own money? Because there is a viewpoint that says I used zero money of my own. And when I'm getting, let's say, a what was it, $12 return, $1.40 times 8 shares. When I'm getting this $11 return, in order to calculate the ROI on this, you would have to put in how much money you paid for it. But in this case, I used OPM. I used other people's money. I got this money from what? From selling promises into the future. So I'm using other people's money to buy an asset that's going to pay me right now. Now, when we go back to Palantir, we saw that our loan, quote unquote loan, we're taking needs to be settled on. The end of the terms is in 861 days. 861 days. Let's just do divided by 30. So there's about 28 months, almost 29 months. And let's say if we're getting about 11 bucks times 1120, so we've just borrowed money from a promise in the future that we may or may not have to fulfill. We took that money, which wasn't ours, OPM. We took that money, bought real life uh, assets that are producing money now based on the future, an asset of the future, Bitcoin, and without reinvesting any money. During the time, we're just waiting to see if we need to pay back the money. We've already made $321. Now, that might not seem like a lot. And again, it's because a lot of people don't understand compounding and how to use the stock market. What if you took that money and every month, you're just buying more shares of BTCI, growing that cash flow stream? So these are the things that I've been doing in my real life. And then I've been taking that and I've been multiplying it by right now, the last 2 days I've spent with a fellow trader that is born and raised in the Philippines, and she's using $58 currency exchange rate. So look at this. Like in peso, what can you get? Can you buy a house? What about a studio apartment in the Philippines with 18,000 peso? I don't know, or you reinvest it. There's just all these different things that I have been thinking about this week for this real life, for the first video of this real life trading reports. Hopefully next week's video will be more exciting. Aloha.